This channel is for educational purposes only. Please do your own due diligence before making any investment decisions.
Hi, this is Joe Rabil. So what I want to do today, I'm going to talk about ADX, but most people focus on the ADX line when they're discussing this indicator. But I want to talk about the directional lines. There's two directional lines, a positive DI and a negative DI. All right, I want to focus on what is taking place here and how we can use this to really improve. I think there's some hidden things taking place that can really help us. All right. Now, before we get into that, if you want to learn some more about some of these techniques, I would suggest starting with the book. It's at rabilstockresearch.com/book. And then also, if you enjoy this content, please hit the like button and also subscribe. Okay, I'm going to use several examples, and I'm going to use all weekly charts, all right, but different stocks. And I just want to point out some different things related to the DI. Now, just starting from the beginning here, we've got this blue line. That's the ADX line, all right? Now, what that is based off of is what's taking place in the positive DI, which is the green line, and the negative DI, which is the red line. So as these lines move apart, the blue line will start rising. All right. It's a sign of strength in the trend. If green is moving up and red is moving down and it continues to do that, then the blue line will go up. If red is going up and green is going down, the blue line will go up. It is non-directional. It doesn't care which direction market's going. But if the strength is good enough to cause the red line to keep going and the green line to continue dropping, then the ADX line is going to move to the upside. All right, now what I want to focus in on is the 25 line going across here. All right, so we've got this 25 level. And I also want to focus in on the pivot levels. In other words, where price is pivoting, making higher highs and higher lows. If we look at the way this played out, green looked like it was breaking out here. All right, but if you notice the way it played out, we had this red DI drop and then it basically came back up to the prior high. It really wasn't. So then when it came back down here, it hadn't really been going to new highs. This was more of a sideways pattern at this point. Even though this kind of looked like it was moving higher, it really wasn't a true breakout level. Now, what ends up happening, if you notice, we get a real clear break above these levels in price. And then you get a clear new high. So I'm looking at the prior peak here. And the reason why I can do that is because I have a pivot high in place. We only want to compare the pivots in the DI line when price is making a pivot. All right. So if that happens, we make a higher high here. We break out of this consolidation. From that point on, I'm looking to see if we can hold 25. If we make a pivot low above 25, then you should start thinking that we're going to probably start moving to the upside, and it could provide a trading opportunity. Now, this works on all time frames. I started learning this when I was trading the S&P E-mini off of intraday charts and recognizing when green DI can turn up and hold 25 after not being able to do that for a little while and confirming what's taking place in price, then we've got a pretty good opportunity in our hands. Now, it might just be a trading opportunity, but if you look at the bigger picture, and in this case, this was the start of a new trend. So it can be very helpful from that standpoint. And then if you notice, we're still relatively close to the 25 line here. We had another opportunity to play the pullback and play the higher low. All right, now let's go another example. Let's look at something like this HOMB. So this is a regional bank. And again, look at how price is going sideways. And we can look and see that green DI tried to pop here to the upside, but then it just dropped back down, never made a higher low above 25, right? And then red kind of did the same thing. And then red tried to poke up here, but then look at what happened. We get a clear breakout. First, we get a clear breakout in price, and then we get a clear breakout in green DI, and it holds above the 25, making a higher low. So we can play this and then look, again, you look at it as a trading play. In this case, it's breaking out of a big base. It was a big base that it was developing out of. So we could look at that as the start of something. Okay. Let's take a look at this SKT. Now, this is a little bit different. This is where it starts to get a little trickier. So price is starting to consolidate here and make a move to the downside. If you notice, we make a peak in green DI, another peak here, another peak here, another peak here. So we're making lower highs. Now, it is still in command because red isn't breaking out and taking over, but green is in command. But if you notice, here is where green makes another higher high. After starting the consolidation here in price, we also make a higher high in green DI and a higher high in price. So this is where we should think that we're starting a new phase to the upside. All right, just watching these lines now. And what I suggest to my subscribers, and this is in my course, I go into this in detail and talking about how to use these DIs. But if you take the blue line off, all right, you just take the ADX and just kind of take it off so you can't see it, and you look just at the green and red. You can look for these patterns where they're making lower highs and you're waiting for it to make a higher high and confirm the price action. All right. Let's use another example. Let's look at this DE. So this is a great example, I think, because you get a stock that actually made a move to the downside, made a lower pivot high as a negative right here and held 25, and then it moved down. And, you know, it moved down a little bit, but we had this kind of a long sideways pattern that had been in place. All right. Now, here's where I think this is kind of intriguing. Green DI actually takes out these prior peaks, but price really doesn't. Price is making a double top up here, or a triple top, whatever you want to call it. So it doesn't really break out in price. So we don't want to assume that that's the start of a move yet. All right, so when that happens, we wait for the pullback and see if green can hold. All right, now green holds here above red, so we can play the breakout pattern. All right, so as long as green is above red, we can play the breakout of a move if there's some kind of a sideways line in place. Now we get a breakout pattern here. So here's the breakout. We make the higher low, and this holds above 25 and it holds above the red. So we can play this higher low pattern, making the higher low because we have confirmation of price and DI. All right, so you want to continue to look for these patterns as they develop. I can give you a couple more examples. Look at something like Sony. So Sony was trying to get things going here, but look at what is going on. So we're actually making these micro new highs in price, but look at what green DI is doing. Green DI is making lower highs. We don't have true confirmation that things are shifting to the upside until we get this breakout move right here, right? And we get green DI making a higher high, and then we make a pivot. Now, this isn't a true pivot, but because of the way it formed this inside bar after this big green bar, I think you could have considered this a pretty good signal. And then this would have been really a confirming signal, another higher low where green DI holds above, and it clearly was a pivot pattern, making a higher low here at the breakout level. All right, so continue to kind of be on the lookout for these. Let me show you another example of something like Tesla. You can see we make a move to the upside. Now, again, we want to compare the price pattern. So price makes a pivot here and then makes a new pivot high here. So that's a breakout pattern in price, making a higher high. Green DI also breaks out, not only above the green pivot, but also above red, which we like to see. And then you hold the 25 line, hold the red. So this is another higher pivot low that we can watch to play for the start of a continuation move. All right. Now, here's another one to the downside. We made a lower low here in price, and we made a higher high in red DI. And then we could have played, because this held the 25 level, we could have played this for a trading move to the downside. So just constantly be on the lookout, these kind of fresh breakout patterns that develop. And, you know, we can see this in the general market, but I like to look for them in stocks that are emerging, just starting to emerge. If you notice what took place at the beginning of the bear market, we had the drop to the downside. and we break and make a lower low here. Red DI makes a higher high. Now notice all the fits and starts here. We made a move up and then drop back down, move up, drop back down from both green and red. But then we get a clear move. We make a higher low above the 25 line. This makes a lower high right at the 18. And that was actually the start of the bear market to the downside. Right. So use this to your advantage. This is a big, I think this is sort of a hidden thing because I don't think a lot of people talk about this. We can go back and see the start of the move back in 2020 was confirmed finally here in November of 21, where we made a clearly held the 25 line on the DI, right? You see how this is really getting things going. And that was really the start of a pretty dynamic phase for the market. All right. Use this to your advantage. I think this can really help.